Today we're going to talk about Dividend Aristocrats. If you don't know what that is, that's okay. The Procter & Gamble company is a dividend aristocrat. What that means is they've increased their dividend for at least 25 consecutive years. They're currently at 67 years of increasing their dividend. That's pretty impressive. If you look at their stock price, it's up about 13% over the last year. But if you look at the dividend yield, it's around 2.5%, which is not bad, especially for a stable company like this. This is a large cap company with a market cap of $340 billion. It's a member of the Dow Jones Industrial Average and a component of the S&P 500. So what does this company do? Well, they engage in the provision of branded consumer packaged goods worldwide. They operate in 5 different segments. You have beauty, grooming, healthcare, fabric and home care, and baby, feminine and family care. So they have a wide variety of products that you probably use on a daily basis. Some of the brands that they own are Bounty, Charmin, Dawn, Cascade, Dreft, Gain, Olay, Oral-B, Pampers, Tide, Vax, Suck, and Whisper. So when you go to the store and you see those brands, that's probably Procter & Gamble. All right, so the question is, should you buy this stock? Well, let's look at the fair value first. The fair value is calculated using a discounted cash flow model, and the current price is $153 per share. Now, the fair value is $154 per share, which implies a slight upside potential of 1%. But then again, this model works best with stable companies that have a predictable future, and P&G definitely is one of those. Now, if you look at the financial health, they're doing pretty good. They have a strong liquidity position with a current ratio of 1.44 and a quick ratio of 0.97. Their debt-to-equity ratio is 0.68, which is a bit high, but their interest coverage is 9.86, which means that they can handle that debt pretty easily. There are a few analysts that cover this stock. Morgan Stanley has a price target of $165 per share. They have an overweight rating on the stock. Goldman Sachs has a price target of $175 per share with a buy rating. And Wells Fargo has a price target of $150 per share with an equal weight rating. So overall, the consensus price target is $163 per share, which implies an upside potential of 6.6%. The average dividend yield for the last 10 years is around 2.9%, which is a bit lower than the current yield of 2.5%. So that's a little bit interesting. Now, if you want to dig deeper into this company, I'll provide more information below. Check out our other videos on investing in dividend stocks. And as always, I'd appreciate it if you could hit the like button and subscribe. Thanks for watching.